Hello, and welcome to another video from the team here at Money Without Debt. In the last of our short videos about modern money, we examined some simple practical solutions to the problems of our debt-based monetary system. Let us remind ourselves of the key problems. Because our money is created as debt when banks extend loans, this creates a number of systemic issues. Society is burdened with perpetual and ever-increasing debt is problem number one. Problem number two is that reckless lending creates destructive cycles of boom and bust. Debt money is not directed towards productive uses, undermining the economy. Banks undermine democracy because they control how much money enters the economy and what it can be spent on. Money deposited at a bank becomes their legal property, which they can then use to gamble on asset bubbles in the financial markets. When their speculative gambling goes wrong, we, the taxpayer, are obliged to bail out the banks. And of course, the interest we pay on money created as debt represents a needless tax on all of society. There was no need for any nation to rent its own currency from a private bank. So how do we solve these problems? Well, first and foremost, we must remove from private banks their license to create our money supply as debt. We could do this by implementing what is known as full reserve banking. Under this system, banks cannot create money out of thin air when making loans. Loans can only be made from existing deposits, and ownership of the money stays with the depositor, not the bank. Most people imagine banks work this way already, so most people will notice very little change. With full reserve banking, people who simply want secure storage for their money could have a simple current account. It would attract no interest, but would remain entirely safe and secure. People who wanted a return on their money could opt for an interest-generating account that allowed the bank to invest the money on their behalf. Depositors would have to weigh the risks and benefits accordingly, just as anyone does when they invest in a private company. Should the bank fail for any reason, all the secure accounts could be moved to another bank with no money lost, and then those with investment accounts would be paid off from the bank's liquidated assets, as happens when any normal company fails. In this system, banks could still make loans, but only those seeking to speculate with their money would be at any risk. Everyone else's money would be 100% secure. So there would be no need at all for a bank bailout using taxpayers' money, as the bank could be allowed to fail like any other business. You can be sure that banks will be much more careful with their lending when they realize that the taxpayer will no longer provide them with free insurance. Preventing banks from creating their own money was the spirit and direct intention of the 1844 Bank Charter Act, passed by the then Conservative government of Sir Robert Peel. They could not have foreseen digital money, digital bank credit, debit cards and internet banking, so the Act has been totally undermined. By removing from private banks their monopoly to create money as debt, we can restore that legislation so it can act as was intended. Money will be in public ownership in the national interest. No small group of people need to be allowed to extract value and work from society by virtue of their ownership of the means of exchange. So to summarize, we need to transfer the power of money creation into public ownership in the national interest, and we need to retain ownership and control over our money when it enters a bank. This simply meets the public's existing and wholly reasonable expectations of banking. Of course, if we remove the power to create money from private banks, it raises the question: to who do we give that power afterwards? Many worry that this power will be transferred to politicians who have a poor record of fiscal restraint. Banks have an inherent conflict of interest when they create money, but politicians have a similar conflict of interest, tempting them to buy votes by creating or borrowing money. It is critical that we insulate money from vested interest. Then our money supply can be balanced with the needs of the economy, not the needs of bankers or politicians. But how can this be achieved? Well, there is a body that functions independently of banks and Westminster already. That body is the Monetary Policy Committee of the Bank of England. They set base interest rates and can create central bank money already. A body like this could operate with transparency, accountability, and can be legally protected from party political pressures. They could create the money we need for economic prosperity just as easily as a private bank. The decisions of an organization like this about money creation would be free of vested interest, and best of all, the money would be debt-free, saving all of us a fortune in unnecessary interest payments every year. The mechanism for getting this debt-free money into the economy would be simple. They could instruct the Bank of England to increase the government's central government account, and this newly created money would be added to tax revenues and distributed according to the elected government's manifesto and priorities. Imagine that. Debt-free money, no interest to pay, created carefully and in balance with the needs of the economy by an independent, transparent and accountable body in the national interest. No longer will we be hostages of fortune to the greed and profiteering of private banks. We, the public, the rightful owners of the nation's wealth, would have the free use of the utility of money. Because the economy would have the money needed to fulfill its potential, our desperate reliance on bank lending would be over. We could create the money we need to pay down our debts, run the economy, and provide good jobs and services, all free of interest payments to private companies. Of course, there are quite a lot of technical details and careful thought needed for such a change to succeed, detail that is beyond the scope of this short video. But the underlying principles are simple, and the technical details and the process by which we could move away from debt money have already been studied in detail. Draft legislation already exists to make these changes. Legislation that offers the only hope for reducing our debts and having a just and sustainable economy. Of course, the only way we will ever regain control over the utility of money is to demand change. The current ignorant dialogue between politicians, economists, and the media must be ignored and then shattered with the truth. We must tell our elected leaders that we will not put up with money as debt any longer. Join the campaign for monetary reform via our website, moneywithoutdebt.org.uk, and those of our friends over at positivemoney.org.uk. Our dependence on the Ponzi scheme of bank credit has brought the economies of Europe to the brink of systemic collapse. Now is the perfect time to demand that money is returned to those who actually create the wealth, the people of the nation. Join the campaign for change today so we can have a future for our children that is free from economic chaos and crippling repayments, so we can have money without debt.